Ladies and gentlemen, good day and welcome to Focus Lighting and Fixtures Limited Q4 FY23 Results Conference Call hosted by Kirin Advisors. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vastupal Shah from Kirin Advisors. Over to you, sir.
Thank you. Thank you and good afternoon, everyone. Thank you for joining the conference call of Focus Lighting and Fixtures Limited. I would like to welcome Mr. Amit Seth, Managing Director of the company, and Mr. Tarun Udeshi, Chief Financial Officer of the company. Tarunji, Amitji, over to you, sir.
Very good afternoon to all of you.
Good afternoon.
And thanks for joining this call. Yes, please. Can we start?
Yes, we can.
So, first of all, good afternoon to everybody. And we are happy to announce our results for the year end 2023. And the results were extremely good for us. And it was very, very encouraging. Our last quarter turnovers. Tarun, what was the last quarter turnover?
40.89 crores.
Yes. Last turnover quarter was 40.89 crores. And and what was the net profit?
5.42 crores.
5.42 crores was the net profit. As compared to last year, which was 2.86 crores for the same quarter ending. So overall, there is a total percentage of 57% growth. And in terms of absolute value, it is 90% growth. Compared to year on year, our last year net profit was 4.10 crores. Total profit was 4.10 crores. This year, our total profit has come to 23.6 crores. So there is a total percentage jump of 476%. Yes, please. So these are the results for this year. If we can start with question answers quickly so that we can move forward. Hello?
Yes, sir. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Rahul Dani from Monarch Network. Please go ahead.
Yeah, thank you, sir, for the opportunity. Just a couple of questions from my end. If you could give the revenue split between railway, retail, and what is your outlook on the railway business? Now, what are the number of products we have been approved for?
Okay, so the details will be given by Tarun. I will just give you the outlook and the forecast what we have and what we are looking for. Okay.
Sure.
So you want to know particularly about railway, right?
Right.
So railway, during the last meet also I had informed we have roughly 16 products which have been approved by railway. And this month, till date, we were under development vendor. Now we'll become from next month approved vendor. So till last year, we were only eligible for 20%. From next month, once the process is done, maybe there might be a month delay in the process, but once the process is done, we will be approved for 80% of the orders. Till railway is concerned, what we are trying to do is, railway, as I told last time also, there is an aspiration that they want to take it to an international level where they want to showcase the world that, we are no less than European countries, sorry, my bad. And this is what is happening with railways. So what we have done is we have taken an initiative to do first time product designing also from Germany. Till now, the lighting was not at par in terms of as per the international standards. So first time we are taking an initiative, we are giving them certain technologies which the industry is not providing till date. And we have started designing our first product for railway for Vande Bharat, and that will be very, very similar to international lines. What is given for bullet trains internationally, same lights will be provided. But this is on a design stage. Once the railway approves it, then we will be going further. So this is over and above what we are doing for railways. We also designing. Yeah, sorry.
Sorry, you can continue.
Yeah, so we are also designing some general lighting products for railway, and we are proposing them IoT for railways, because what has happened is we had done some survey for railway, and we were the only company rather to do it, wherein we realized that the intensity is very bright during night time. If one passenger enters and if he switches on one light also, it disturbs everybody. So what we have proposed is that they should go with IoT, which they have welcomed this proposal from our side. And this will help to dim the lights. If somebody enters late in the night also, it can dim the lights up to 5%. And so it does not disturb. And it also saves on power and energy. That's the whole idea. So that is also one initiative which we have taken. And also we are working on the light pollution for railway, wherein the light is not spreading to the other side, which is currently happening. So it does not disturb other passengers. So we are going little technical with railway. It's a lengthy process, but this is not, this is over and above the approved product. What we are, it's an initiative from Focus. The idea is that we want to showcase them that, okay, what we can offer today in the industry in terms of technicality, in terms of quality, others cannot give. That's the whole idea.
So what could be the revenue potential, like the addressable market size of any kind of data which you would like to provide?
See, there are two areas for railway. One is the existing product, and one is an initiative which we are taking it by ourselves. So we are keeping the initiatives what we are taking it from our side. But for this year, we are expecting a revenue somewhere around 15 to 20 crores from railway.
Okay.
Which will happen.
And so how has been the export markets? We recently had got some good order from the export markets. So if you could just throw some color on the export markets and what is the potential? And similarly in the retail space, if you could just give us some idea as to any new projects we have undertaken or some kind of order book for the retail business.
So I've been telling this in past, we don't have order books. Like ours is month to month or 2 months orders in advance. So we have the PO for 2 months and then there are renewal. How the system work is with us is till retail is concerned, I'm talking about. The system is very clear. Once we are approved, we are assured that we are getting business for coming 1 or 2 years. But neither they know, neither we know how many sites they are going to execute it and how many sites we are going to get or how many orders we are going to get. Number one. Number two, till export is concerned, Middle East is booming for us. And Middle East is, we are investing very heavily in Middle East. We are all hearing about Saudi. And we have taken a conscious call that we will go to Saudi, we'll open an office and we'll have our own office based in Saudi because the highest revenue is coming from Saudi till retail is concerned. Till overall Middle East is concerned, Middle East is still a very, very lucrative business, and we might go ahead and open an experience center the way we have opened experience centers in India. And the idea is to showcase the technology what we can give to those companies. Till absolute values are concerned, Tarun, if you can just come in and give the absolute values of exports, please.
Yeah.
So in Dubai, we have done the 11% of turnover comes from Dubai, which is 19 crores from the total turnover of 168 crores as of in this financial year.
Railway business would be how much?
Railway business as of in this financial year, we have done 1.18 crores.
1.18 crores.
Yeah.
Okay, sir. Thank you so much and all the best.
Thank you. Thank you so much, sir.
Thank you. Our next question is from the line of Shubham Doltani from Hexagon Assets. Please go ahead.
Hello, can you hear me?
Yeah, loud and clear.
Yeah, so I was just going to ask this about the trading income. So why is this so volatile? And can I get a run rate of how you will do in the upcoming quarters?
See, this point was discussed in last quarter also, and as I told in last quarter, so I'm repeating again. There is we name it as trading, but I think Tarun can explain it better. It's not 100% we manufacture. Number one, we brand it also. There are small OEMs who manufacture things for us. Okay, there are no companies in the world who manufactures 100% in-house, and that is something what we take in trading around. Tarun, correct me if I'm wrong.
Yeah,
okay.
Correct.
But everything is sold under our brand, and everything is this investment is from our side. The products are, whether it is dice, tools, or the designs, they are under our control. So yes, that is what we trade. We name it in trading account. If you look at companies like Havels or Philips, then it is 100% trading for them because they outsource their manufacturing. So this is what we do. There is a second part of trading. What we do is we are entering into a lot of new verticals. Okay. So when I say new verticals, mainly we have entered into 3D projection mapping, which was one of the large order which we have taken in Surat, which we are yet to execute it, which will be executed next month. 3D projection mapping is something wherein it's more of a design base. It is design, it is content development, and execution skills. So there are companies who manufacture projectors. We don't manufacture projectors, so that will come under trading. That is pure trading form. What trading figures you are seeing in the balance sheet is not trading. It is manufactured for us and we sell it, but we put it in trading. There is another area of trading which is coming, wherein we are buying from some international companies, okay, for outdoor applications. We were an indoor company till last year. We have just started investing in outdoor. I have been in Europe for last 1 month, exploring what are the technologies available and how we can get edge over others. So typically as a company, when we started retail also, we were associated with one of the largest companies in the world. We learned from that company and then we started manufacturing. This is the same thing what we were doing in outdoor. We were learning from last 1.5, 2 years, how outdoor, what are the strengths, weaknesses, what are the difficulties, what are the limitations brands have, and then we wanted to get into manufacturing. So another 2 years we'll be investing very heavily in outdoor products, and we'll be investing by ourselves in those technology, and we want to add value. So the reason we were trading is one of the large orders what we did was Kundalpur Jain Temple. So that was 100% pure trading, buying from a manufacturer, buying from a brand and selling it here. But in that process, we understood the limitations. In that process, we understood what are the problems client face. And the whole idea was that how we can come out with a technology where we can eradicate all this problem. So now we are going into the manufacturing process. We are going into the design process, from our optic to the electronics to every small thing, and then we will manufacture it.
Okay, great. And just one more thing, you said 15-20 crore revenue from railway. So for how many years, or for next year you were saying?
Sorry, come again. I didn't get your question.
You just mentioned 15-20 crore revenue from railway, right? For upcoming years.
For this year.
So for this year, FY24.
Yeah.
Okay.
Yeah, this is our first year as an approved vendor. So we overall railway as a vertical, we see a potential that we will cross in another 2 years somewhere around 70 to 80 crores. Yeah, but being the first year, we are not keeping very high targets for ourselves.
Okay, great.
Yeah.
Thank you. Our next question is from the line of Devesh Srimali from DS Investment. Please go ahead.
Yeah, hi. Congratulations for good numbers. I just wanted a broad idea about, we did about 105 last year where, presumably retail was quite heavy. This year we have almost 170. And next year we are sort of saying that we have Baba Temple, Surat project, railway, which put together roughly, 50 crore additional to the retail growth that we expect. So number one, is that reading right that, 170 take 50 crore these orders and the retail would do another 20-30%? Is that a right way to look? I'm not asking numbers, but directionally, is that a right way to see top line?
So okay. Let me make it very easy and clear for all of us. I have been telling this last year also. There are two things. So when we were internally discussing, I like to be honest, and that's the best part of it, right? So somebody from the meeting told me that let's not discuss the last quarter, because last quarter was very good. I said, what's wrong if you are comparing it? And we have been very, very clear that if you compare we as a company, please don't compare us quarter to quarter. If you compare it quarter to quarter, then there will always be certain dejection. There will be certain, you will feel that, oh, why this quarter is bad and last quarter was good, or the previous quarter was good, something like that. We are into project business. So a lot of companies, a lot of investors, they ask us, what are your projections? We don't have projections. We are working on certain large projects. We know that it might come, it might not come. Okay. So if that comes, that quarter becomes very good, number one. In terms of projection also, it is very difficult for us to forecast today that there was a question from your side that retail will grow by 30 crores or 50 crores or whatever. Overall growth will be 50 crores. What we see is that there will be an exponential growth, which vertical will give, where the opportunity comes, we don't know today. Okay. All I can say is that there was a time 2 years back where our project value was not more than 1 crore, 2 crores. Today our project value last year was 15 crores. Now we are working on a single large project between 30 crores to 100 crores. Okay. These are the type of large projects we are working on. So a single large project comes that completely changes the turnover of the company. We are working on it, and these are some government projects, these are some private projects. We don't know today when this project will materialize, whether it will materialize this year or whether it will materialize this year. So I've been telling all the investors that you have to look we as a company, not even year to year. You have to look at the 3 to 5 years projection. If you ask me that where we will be after 5 years, we know that. Because we know that what are the types of projects we are doing, what are the types of investments we are doing on technology, what are the types of products we are bringing in, what are the gaps we are filling in. That we know. But if you are looking for a short term, we are not a right company. And this is an exact statement I had given even last quarter also. So my humble request is that yes, every investor is looking that year on year what will be the growth. But as a company, what we are looking is 3 years planning and 5 years planning. Certainly not year to year planning.
Got it. That's absolutely clear. Right. The second part would be more, cash flow. What would be your view going forward? I think, just broadly qualitative comment in terms of how do you see cash flow spanning out in this year, next year?
See, till date, we have been a debt-free company. Okay. We are currently a debt-free company, and with turnovers, there will be a cash flow issues. There will be pressure on cash because these are large projects what we are working on. Okay. These are really, really large projects we are working on, and we might face some problems. Till railway is concerned, we will not face problems because railway, whatever purchase orders are there, our banks are ready to discount it by 98% or 90%. I don't know the exact figure, but somewhere it is like that. Till other government projects are concerned where we are working right now, if one of those projects come in, we will have some problems, but we will when it's like when you reach there, we will see how we manage it. It's not that we are going to lose orders on that because of that. But in our day-to-day activity, today we don't have any cash flow problems. The only problem with what we see is if there are extremely large, like let's say a single order of 100 crores comes, any company will, like we are a 170 crore, let's say 200 crore company. Okay, if you get a single order of 100 crores, you will have some problems, right? It's not going to be easy.
Yeah.
But the question is whether we can manage it. The answer is yes. We will be able to manage it. We are also working behind the scenes on how we are going to arrange this type of money. We are talking to a lot of investors. We are talking to banks that how we can discount it or how we can do it on LC where we can manage it. Till overall our industry is concerned, our payment cycle is somewhere around 70 days. Tarun, it is 60 days or 70 days?
68 days.
68 days is our payment cycle, which is very good. Okay. We are trying to improve it. Okay. Our target is that we can improve it to somewhere around 60 days this year. We want to bring it to somewhere around 45 days. And this is where we don't have cash flow problems. But for large orders, yes, we might face it. We might have some liquidity crunch, and we will work out with our banks. We'll work out with our investors.
Got it. Thanks for the response and wish you good luck for next year.
Thank you so much. Thank you.
Thank you. Our next question is from the line of Samir Parekh from Reshma Shares and Stocks Limited. Please go ahead. Mr. Parekh, your line has been unmuted. Please go ahead with your question.
Hi, good morning. Am I audible?
Yes, sir.
Good afternoon. You're audible.
Yeah. So, firstly, congratulations on fantastic performance. I have a few questions. Should I go one after the other, or should I just lay them all out first and then?
I'll suggest one after another. I have a short-term memory.
Okay, sure. No problem.
It becomes easier for all of us.
Perfect. Just a first question. On our performance, we have seen a profit growth of almost 90%, and revenue growth has been about 15%. Now, this revenue growth compared to the December quarter has been lower. Again, I've heard from some of your previous answers that you can't predict some of this thing, but can you throw some light over there on how this revenue growth run rate can be maintained, or?
There is no maintenance, and I've already answered this question, and I'm repeatedly telling that we are into project business. Okay. We will see. As an investor, I again suggest and I again request: don't look at us. Okay, if you're really looking at that this company has to grow quarter to quarter, then I can stay invested, then we are not the right company. If I have to be very honest and blunt. We are into project business. And there are a project to materialize, we don't know when a builder will get an NOC. We don't know when the government will get a permission to execute the project. We have no idea on that. There are certain dates given to us. Okay, based on those assumptions, if I give it to you and if it does not happen, then in the next quarter you will say, hey, what's going on? You gave us this commitment. So we are not giving you those commitments. We are here. We are looking for growth. We have growth. We have potential. And we have exponential potential. But this growth, if we are looking at for 3 years to 5 years bandwidth, yes, then we are talking on it. But it is not possible that I can talk every quarter, like what was last quarter and why this quarter so much of jump. This type of things are going to happen with us.
Okay. Okay. My second question is on our closing stock. We had our closing stock number was about 38.5 crores compared to 23.5 crores previously. So that's a significant rise in the closing stock number. So this would mean probably there is some sale that has either not been booked or is postponed into the next quarter. Can you throw some light on that?
You can appreciate the turnovers have almost doubled, and as compared to the stocks, it has not doubled. There are closing, even the stocks are there are a lot of fluctuating stocks we have. Okay, so there are certain times, as I told you just a minute back, at times customer says that, okay, this site is ready and you need to deliver it, and they have after that they have certain problems with the state or with the government, certain approvals they have not got, and sometimes those stocks lie with us. But as compared to the turnovers, our stocks have overall come down. Tarun, if you can, we were just discussing day before yesterday. Tarun, if you can just highlight this.
Yes, as compared to the turnover, if you see the inventory level has come down in terms of percentage. So as sir rightly said, some stock inventory is lying because of some approvals and all, but this definitely it is a moving stock. It is not that the stock will lie there, it will lie down for 2 months and all. And if you see the ratio also, the inventory turning ratio also, we have been moving the stock, I think, around 4 times. So this stock also will move. It's not a problem at all. Inventory movement ratio is 4.38% for this financial year, sir.
Okay. So the concern, yes, there is a concern, and the concern comes only when the stock is not moving for more than 365 days.
Correct.
That is where the concern comes. But currently, we don't have concern. We are moving the stock 4 times in a year.
4 times.
Okay. Our percentage of overall percentage compared to the turnover has gone down. So, and we have, as I discussed in last quarter also, we are really working hard on systems wherein it's a vertical storage system. We are investing very heavily. So complete electronics now has gone into those vertical storage systems. We are also now heavy items. We are putting it in vertical storage system. We have currently reduced our stock from the floor to this vertical storage system by 25%. We are doing it, and everything is integrated with SAP. The overall process will still take another 2 months to 3 months for us to learn and to adjust to it. But if this system works out, then we'll be investing and we will ensure that 100% of the material comes in that.
Okay.
Yeah.
Okay, thank you. My next question is, we have received permission, I believe, to invest about 100 crores in 4 subsidiaries. So just wanted to understand what the status is of that, and is this investment going to be only us, or are there any other strategic investors or anybody involved in these subsidiaries? And what kind of revenue potential, if any, we have idea from what these subsidiaries are going to be doing?
4 subsidiaries.
Right.
Sorry. Tarun, what are the 4 subsidiaries?
We have this Dubai, Singapore. There are 2 subsidiaries, wholly owned subsidiaries.
Those are wholly owned subsidiaries.
Those are wholly owned. Okay. And so our investment, for some reason, I don't know, I could have made a mistake, but we were proposing to invest 100 crores in these subsidiaries.
Okay. So we have, this was also discussed in last quarter. We are repeating these questions again and again. But anyway, I'll answer this. See, we have one more vertical called Sandoz, where Focus is a 51% stakeholder.
Okay.
And wherein we are working on a lot of government projects. So there are 3 investors from outside who own 16% roughly, and we own 51%. And the deal is very clear. They have good. They are doing some business in government, and we have technology, we have products, and they have connections where they can give us a platform to showcase what we can do and how we can add value. So that is where we have taken this limit, so that if at all there is a large project that comes in, we don't delay it.
Okay. My next question, and I think you have already answered this previously, but I'll just try to. Our performance has been great so far, and previously we had, from our turnover, and as you said, that we cannot measure our performance quarter on quarter, etc., because that is visible in our quarterly turnovers, etc., too. But at what point, can we issue year-on-year guidances, if not quarter-on-quarter? Because that will generally, help the entire investor community to get a better idea.
I appreciate this question, and okay, there are why I've been requesting investors to look for a broader picture of 3 years or 5 years. The reason is that today, somebody asked that what is the trading figures, and some large projects have been executed by trading, and I answered that this was a learning curve for us. Now we are investing on it. Typically, please understand one thing: any company who starts a process from zero, from design, development, tooling, execution, the process is of somewhere 1.5 year. Okay. Once you have your own manufacturing, the growth is exponential. Okay. Right now, whatever we are doing till outdoor is concerned, outdoor lighting, we are trading. We have been associated with 2 big companies, or rather top companies from Europe, and we are working hand in glove for the large projects we are executing here in India. Now, those things will be manufactured after 2 years. So for me to predict it year on year, there will be a growth year on year. In terms of what percentage, I really don't know. But the real growth we will see after 3 years, when we have our own products in hand. So that's why I've been telling that look at the bandwidth of 3 to 5 years time.
Okay. And just quickly, my last question. I know definitely you won't be able to comment a whole lot, but I'll just throw it out there. Just fantastic performance.
I think there are a lot of other investors also who want to ask questions. Vastupalji, if you can limit the questions from every investor, then it will be easier, Because there were a lot of complaints, with due regards to everybody, there were a lot of complaints that, we didn't get the opportunity to ask questions. I have no problem, you can continue, but we have a limited time bank.
Sure. Now, just last quickly, we've moved to, a market cap of almost over 1,000 crores, and now we are at about somewhere around 800, and our price has moved. So any comments on why, even after fantastic results, we're seeing some erratic stock price movement?
I don't have control, and I'm sure you will appreciate that as a company, right, and as an individual, me as an individual, I don't have control what you investors do. Okay. So for me to answer this, even after giving such fantastic results, why investors, what happens in the market is not in our control. So how do we answer this?
Great. Fine. No problem. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. Thank you. Our next question is from the line of Naveen from Bellwether Capital. Please go ahead.
Am I audible?
Yeah, Naveen, you are audible.
Sir, this is pertaining to your balance sheet. There is a significant jump in your other financial asset. It has gone from 94 lakhs to 11 odd crores. So, wanted to understand why it is so.
I think Tarun can answer on that.
Yeah, other financial assets, you're saying?
Yeah, under non-current assets, other financial assets has jumped from 94 to 11.41 crores. Meanwhile, can I ask one more question, sir?
Yeah, Tarun,
Yeah,
if you can just cross-check and come back with the answer on
Yes.
that.
Yes.
Yeah, this is regarding your segment results. When I look at your manufacturing segment, there is a lot of volatility in the margin. Is it because of the different verticals or the product mix change, or can you explain the same?
It is certainly because of different verticals have different margins. Okay. And you will see those type of volatility. But as a company, what we are seeing is how overall we can maintain EBITDA and PAT.
Understood.
And also in project business, there are certain business which happens on tendering. Okay. And there are certain processes where you know that you're not L1, and then they offer you that this is the price. If you want to match it, you can still get the order. So those are certain decisions we take it whether we want to do this business or not, and what are the advantages we are having. For example, when we were doing one of the very prestigious government project, Delhi Airport, one of the orders for outdoor, because we were not an outdoor company, and we got an opportunity of doing it, but the margins were not really great. And we decided we do it because that will give an exposure. Focus has done outdoor for DR, and because of that we get a lot of other projects from L&T, because L&T is a buyer, and they get confidence. Okay, this guy can execute it. So there are certain times we take those type of strategic decisions.
Understand.
Yeah.
Last question is this revenue of 169 crores. Can you give a broad breakup between what are the top verticals, revenue contribution from them? Say retail. You already given railways, but others.
See, I don't have the exact figures. Tarun can give that, but since he's just looking into your first question, retail is still 50 to 60%, what I understand. Outdoor infra is somewhere around 15%. Export is somewhere around 10 to 15% right now we have. Infra ho gaya, outdoor ho gaya. What is left out? Retail. Then we have home lighting. Home lighting is somewhere around 15 to 20%. So this is the overall breakup what we have. Hello.
So the line for the participant has dropped. We'll move to the next question.
Yeah. Sure. Tarun.
Our next question is from the line of Ketan Karani from Ketan Karani Search. Please go ahead.
Good afternoon to all of you, and really congratulations on really superb results. I don't know what market understands from analyst point of view. Manufacturing companies have to be always valued as quarter on quarter, YOY, and not on quarter. Just moving from that, I just want to understand that you have been focusing on focus has been focusing on the next 3 to 5 years. And Amit Bhai has been very clear, don't value us on quarter or YOY also. So YOY is also out. So now the question remains that what are we looking at from next 3 to 5 years perspective? So
thank you. Somebody is asking this question.
So I want to understand next 3 years, this is 2026, 27, 28 is something which you would have analyzed and crystallized some data. So I just want to know what kind of revenue. So it's like, are we looking at 600 crore in 26 turnover or 700 crore in 2027 or something like that, which you may have an internal figure, if you can just share. I don't want to know the profits, but only the revenue model, what you have designed.
No, I'll share. I'm allowed to share legally, right? Whatever I'm allowed to share legally, I have no problem in sharing, Ketan Bhai. And thank you very much for asking this question. So, Ketan Bhai, last 15 years we've been doing retail.
Yeah.
2016, when the profits were dipping down, we decided that we need to look into something outside. So that's where we went for retail, what technologies we can get, and then we got an idea that we can do home lighting. So we started investing on home lighting, and after that COVID, 2019 we introduced, 21, 22 was COVID, we could not do. And then for us, home lighting or rather that vertical, we call it as BNB, it became a very interesting vertical where our profit margins were, the GP was somewhere around 60. Okay. And we realized that it has got a potential that we can from 20 crores, we can jump to 100 crores in coming 5 years time, and we need to invest very heavily. So this year we've been investing because we didn't have a complete portfolio. We just started investing on it. Over this process in between 21 and 22, we've been working, and we were lucky enough that we got a good exposure for government projects or good exposure for infrastructure projects. We were one of the largest suppliers. A lot of companies have supplied and a lot of companies claim also, but we are doing Central Vista, Central Secretariat. And because of one airport today, first time Indian company has been specified for Bombay Airport also. And we are really working on some very large government beautification process. Now this is currently all trading. The whole idea what we as Focus have is that how this trading can be converted into manufacturing wherein the profitability is higher, number one. And that is the reason I was in Europe for 1 month, going from company to company, understanding what technologies we can bring in, what are the types of investments required, what are the types of technologies we require, which will help us for this growth. And so if you look at the verticals, we have retail. We are bringing some technologies in retail, okay, where we'll be ensured that these technologies, forget India, but even in Europe, these technologies are not available. Okay, I've been into, there's an exhibition of Euroshop, and in Euroshop, we see the best technology. It's like a mecca for retail industry, that exhibition. That exhibition, you cannot finish it in 5 days' time. But we could not see those technologies there. And we were very happy that if we can bring these technologies to life. We are working on this technology. We are working on sustainability. Now, worldwide, sustainability is becoming a very big question. Green technology, sustainability. When we are the first company where we will be using in our product, we use plastics. Okay. It is a problem. I'm not going to very technical, but it is not technically possible that we can use plastics in our product. We are doing it. So, A, we are creating a brand image. B, we are creating volumes. 3, we are creating bottlenecks for other companies to easily get into those technologies. This is a retail side. Coming to infra and outdoor, we have 1 year, this last 1 year, we have just done trading in infra and outdoor. We did some 30-40 crore rupee business in overall outdoor infra, whatever we did. But we realized what are the bottlenecks we have in this infra and outdoor. Now we are working with companies, we are working with physicians, mathematicians to develop technology especially for us. Okay. Which will remove, I'm not going to the bottlenecks. If you guys want to know, you can come down.
No, I think
because you guys will not even understand it. Now
I do understand it, sir, because I have a big background from research and economic research for last 30-40 years now. So almost like, so I'm really honored to be at least part of the answering part. But I think being too much detailed, Amit bhai, would be injustice to the other participants.
So what we are doing is
I just want to know what is the kind of revenue model we are looking at in 2026-27. Maybe it's like 600 crore, 700 crore revenue volume. We are looking at that kind of volume or not?
We are targeting, as a company, we are targeting somewhere between 400 to 500 crores.
So that is for 26 we are targeting.
This is for 26-27 we are targeting.
Okay.
And and we are very bullish on 3 areas: retail, which is our bread and butter; home lighting; infra lighting; and railways. 4 areas.
So just to expand on the same question which you have answered, this is the kind of technology development which we are planning to do it ourselves and manufacture ourselves. So what you said just few minutes ago, like it's like your GP was 60% in retail.
I'll just give you one simple example. Mr. Modi wants every city to be smart in India.
Yes.
Now, just to give you in a very simplified way, there's a way government can have revenue through our lights. We call it as smart poles.
Okay.
They can do advertisement on it. They can have a revenue model in terms of if some car is breaking the signal, he will be automatically charged. If he's overspeeding, he will be automatically charged. If a lady is harassed on the road, if there's a rape happening, police will get the notification in a fraction of a second.
I think something like Singapore. What is happening in Singapore? It's like Singapore already has some of those.
Exactly. It's a Singapore-based company with whom we have tied up. They are doing transfer of technology to us, and we will have the license to manufacture it.
So let me just. I believe that the kind of investment which you mentioned some minutes ago, maybe from 10-20 minutes ago, is like you are investing. Let's like for projects like 30 to 100 crore which require investment. I think cash flow should never be a problem for a company which is debt free and expanding, and the kind of margin which we are looking at is like you have been very clear. Like if I am doing manufacturing, my GP margin is 60%. So I think for most of the analysts who are with me, I am just taking their view also over here. It's like if they are doing 500 crore, 60% is the GP margin, probably lesser than the 60% because I am not going to say for 500 crore you will do 300 crore.
No, it will improve. So a lot of investors ask us question that if there is a growth in your turnovers, will you be able to maintain GP? And my answer to it is very clear. Last year also I said the same thing, that we as a coming from the lighting industry, if we are not in commodity, our GP cannot be less than 40. Okay.
Yeah, I remember the last conference call. I heard it. It's like 1 hour 35 minutes, and I heard it and read it 10 times. I remember that. So I'm very clear that we are looking at 40-50% GP margin on 500 crore kind of turnover. When we are going to do all the manufacturing ourselves. So it's like 500 crore by 40% if I take on the lower side of the margin, which you believe is. It's like 200 crore GP in 2026-27 is something what we are looking at, which is current market cap. Means if you current market cap is 800 crore, means it's like 4 times GP. I don't know which company in the world is valued in this level. It's ridiculously available at throwaway prices. So this is not concerned with market price. I am looking at 3 years, and if I are going to do 500 crore, I think what I know of you, somewhat. You are the most conservative promoter I have seen in my life of like 40 years of research.
It doesn't make sense to give figures which you have in mind, and if you are not able to do it. I
believe that. I'm really happy that Amit bhai, I am a person who wants to know next 5 to 10 years. You have given me 3 to 5 years perspective, like 500 crore, maybe 600 crore is possible, and that 40% GP margin on the lower side, 60% on a higher side, average out at 50 or maybe whatever it is. I am believing that Focus has its focus very clear where it wants to be, where it will be, and where it may exceed, which you are being very conservative as always, not willing to say we will achieve this. And I want to give an example of Infosys over here. They have in last 20 years we started doing research of Infosys at 100 rupees stock without split, without bonus at 120 rupees. They always under-promised and over-delivered. I am assured myself, and I believe that you are that kind of person. Future will hold you like a Narayan Murthy for lighting industry, where your views and where your commitments will be taken in a most right spirit. And I promise, I am promising to myself that you will over-deliver on everything which you have under-promised today. I believe that that's the only thing I wanted to know, and there is nothing on quarter-on-quarter. There are a lot of questions on quarter-on-quarter. I'm not interested in that. Even in next 2024-25, I believe what you will achieve is something which you will exceed your own expectations. So I thank you for your time. Thank you very much. I want to understand that 25, 26, 27, what you will do. That's only what I want to understand.
Yeah. Thank you very much.
Thank you, Amit bhai. Thank you, Tarun bhai. Thank you, Amit bhai. Thank you, everyone.
Thank you so much. Thank you, sir.
Thank you. Our next question is from the line of Sonal Minhas from Prescient Investment Management. Please go ahead.
Hi, sir. Am I audible?
Yeah, you're audible.
Hi. Glad to hear somebody from the research community having such a positive view. I have 2-3 questions. I think just wanted to understand the sustainability of the margins as we go ahead, and this is again from a 3 to 5 year horizon. I'm not talking about That's the first question, sir. And second is more around, I'm sure maybe you have it in mind as well. What kind of team leadership, board level hiring you need to do to or reconstitute to make this look more like incrementally more professionally run company? And I guess these are two questions.
So what was the first question on sustainability on the margins, right?
Yes, sir. Sustainability of margins, given that there is a huge change between FY22 and 23, if you could also cover the flip side of margins, like where this will basically taper down, taper up, that will help us to understand the numbers a little better.
Yeah, so we as a company, the sustainability of the margins will only come with us till the time we invest on technologies which are not easily manufacturable by our competitors. Number one, which are either there are patents on it or there are technological barriers on it, and that is what we are working on. And that is one of the reasons why I'm looking at 3 to 5 years horizon and not immediate. We are trying to invent technologies. We are not today now buying technologies. We are trying to invent technologies with a lot of international companies. We don't have the bandwidth, but we are investing with them. We are encouraging them to develop it for us. So we don't see a very big issue with sustainability of margins with us. Second, we as a company, we are not investing into any product line today, wherein we are just working like a commodity and we are getting into those price war games. We are not into that. We are not good into this. And there are a lot of companies, much bigger companies who've been working on it and they've been extremely successful. It's not we have not tried, we have miserably failed. And we don't have any aspiration to get into it. What we are really looking is that when we bring it, this technologies in India, and if we are successful with this technology, which we see we will be successful, how we can improve it to a better GP or a better net margins or better EBITDA. This is what we are trying to work on it. Okay.
So who's the technically capable person
we have
in the team who leads the R&D? The technical
we have a
initiative. How much is the R&D spend? If you could just highlight that. Yeah.
How much is the R&D spend? I don't have the absolute values of the R&D spend, but we've been investing very heavily. Average, I think 7 to 10% right now we'll be investing on research development of the product. This year it might go even much higher than that. Number one.
So 7 to 10% of your top line is what you think is on R&D?
This year it will be 10% of our top line. It will be not on R&D, only for dies, tools, manufacturing.
Aligned. Everything around product development. And
yeah. It will be,
maybe people team cost also included in that.
No, it's not people team cost. This is only products. Only product and more product. Or it may be high. It might double up to 20% also. Okay, that's a call we'll be taking it over a period of time once it happens. Till R&D is concerned, we have a team, a professional team based in Ahmedabad in factory. We have softwares. We have SolidWorks license, 9 SolidWorks license we have. We have complete lab for testing. We are the only lab which has been enable accredited. So we don't have to go outside to test our product, to do all those R&D. We have a lot of international consultants, designers working on our R&D. So it's a team effort. I head that team. I don't take part in day-to-day sales. Sales is not my forte today. My forte is development. My forte is bring technologies. That's what my passion is. So that is what I head and that is what I enjoy and that is what I do. Sales has been taken care over by, there is a team who takes care of sales all over India, or whether it is in Middle East or Southeast Asia. It's not that I only get into this new development, new verticals and new opportunities what we have. Yeah.
And in terms of second question, again, 3 to 5 year outlook, where do you see gaps in terms of your team, your management, where you need to fill, people you need to get in, make it more like a big org?
See, please understand one thing. Okay, we already have a there is a fixed cost, which we have invested very heavily. And we have kept. Till manpower is concerned, normally, typically, if you are coming from the outside world, you will think that, okay, 170 का turnover है, तो they have 300 people. अगर 400 करोड़ का करना है, तो इनको 600 आदमी चाहिए. No, it's not that way. Till manufacturing is concerned, yes, we might require certain sceneries which we are thinking of investing on. If we are going for developing certain products, I'm not getting into it right now. Till manpower is concerned, okay, these project values are high. The effort which goes for the project value of 1 crore, it's a similar effort goes for a 50 crore project also. And we already have a team in place who is doing it. We need to add manpower. It's not that we don't need to add, but we don't need to double up. We need to add it by 10%, 15% on a higher or 20% max. But we don't need to double up to get this type of turnovers. We still have the bandwidth, we still have the capacity. With the existing team also, we can at least grow by 50 to 70%. Till manufacturing is concerned, till labor is concerned, factory has got the capacity. If it is just an assembly line, we can at least 3 times the turnover this existing factory can take it. But if it is a complete new vertical, new line of where this factory cannot adopt it, then we will be looking at another factory also.
Understand that.
Yeah.
Okay. That's it for myself. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. Our next question is from the line of Johns George, individual investor. Please go ahead.
Hi. Thanks for the time. And Mr. Amit, sir, congratulations on the good results. And also, I got a lot of good details from the previous questions and answers. So I have a few questions. The first one now, remaining questions. The first one now is related to your partner entity, that is the manufacturing entity called Vinod. So I understand that you use Vinod for manufacturing. But related to that, I can see in related party transactions, there is a set of sales towards Vinod. Can I know what is that for? And also another question related to Vinod. If you look at the statements of Vinod, there is a net profit of say 1 crore, 2.4 crore, etc. in the last few years. If had that been an in-house manufacturing facility like your Bhiwadi or Ahmedabad plant, this profit amount would not be incurred by Focus, which would be straight away add to the bottom line. So why would this arrangement in the best interest?
Which year data are you looking at, my friend?
I have taken the statements I have taken from Vinod is from software.in. I bought the statement from that website, which shows in Vinod.
Vinod is a fully owned subsidiary of Focus Lighting.
Fully owned subsidiary.
Yes.
But
where is the question arising of Vinod manufacturing? Vinod was into existence some 3 years back. 3 years back, we bought over Vinod, and today there is no existence of Vinod. There is no business in Vinod. Vinod was just to give you a brief and just to give you a background, Focus never had a manufacturing facility. Vinod was the first company which was originally known as Shantilal and Brothers Manufacturing Department. Shantilal and Brothers Manufacturing Department was a manufacturing company, and we were traders. So we were buying from Shantilal. And I had an emotional attachment with that company because it was my father's company. And that company has been merged into Focus Lighting. And from last 2 years or 3 years, there is no business in it. Everything has been diverted to Focus Lighting. So the data you have is not correct. Maybe you are referring to some old data.
But in your annual report, it is.
Tarun, if you can just answer
Yeah.
it in a much.
Yeah. Mr. George, I think you have sent an email also regarding asking for a detailed explanation on this. So the sales figure, what you are seeing from State Vinod to Focus is nothing but the asset and stock transfer which happened 3 years back from State Vinod to Focus. As sir said, previously State Vinod was manufacturing for Focus. So now what we have done is we have transferred the manufacturing from State Vinod to Focus. In that process, whatever stock and the assets which State Vinod had, that we have sold from State Vinod to Focus. That is what you are seeing as a sale from State Vinod to Focus.
But your
that's a 3 years old story. Why are we discussing it today?
Yeah.
But your 2022 annual report still has State Vinod as a related transaction party. There is a sales and there is a trading balance with related party transaction there. And in my previous email, response to my previous email, you said there is no question of merging. There is no plan for merging State Vinod as well. But now you're saying it is already merged. So I'm a little confused.
3 years back. Who has sent you this email? Can you send me some whatever email coordinations that you have? Okay, let's not get.
Probably I'll continue that.
Okay,
I'll continue offline.
Just to summarize it and make it easy for you. State Vinod has been so there has been a stock transfer, stock sale from State Vinod to Focus Lighting 3 years back during COVID times. And State Vinod is no more into existence. Because we had a larger manufacturing facility in Ahmedabad, it was a conscious decision that we don't want to add another cost by keeping State Vinod.
Okay, understand. Thanks for the details. So let me add one more quick question. So I can see that there was a capex of around 27.45 crores from 2018 to 2022. And there was a 31 crore preferential issue in 2022. I think that capex was for the Ahmedabad and the Bhiwadi plant, which is and in your recent interviews you said this is enough for the next few years.
The fact Bhiwandi factory was first shut down. If you are talking about Bhiwandi factory was under Focus Lighting name only, and it was first shut down, and we shifted Bhiwandi to Ahmedabad, and after that we shut down State Vinod and we shifted it to Ahmedabad. So everything is manufactured under one unit, and whatever the capex was for Ahmedabad factory. Ahmedabad factory is a 80,000 square feet. Okay, so to build that factory, to get machineries, to get all the infrastructure there was a capex that was spent.
Okay.
Any other questions you have?
My question is, what was that 31 crore preferential issue raised for? What was it used for? If already around 30 crores were spent for this Ahmedabad plants over the years, so what was this additional 31 crores used for? The preferential issue was what you raised in 2022.
It's a strategic planning for the company. Okay. That we want to invest in future. There is an investment which you are doing year on year.
Okay.
We are doing a lot of development on a lot of verticals. So that money, that is the reason of this preferential issue, and that is the reason our investor is coming.
Yeah, but what is that? You mean for future expansion? You are saying, but you said already in the recent interview. What I understand is that
is past. We are mixing two things. One, we are talking about 2022, an investor coming in Focus, and before that, there was an investment which was done for Ahmedabad factory. These are two separate things.
Yeah. So what I'm trying to understand is what is this 31 being used for the future? So what will it be? If you can give some color on that.
Technologies, dice, tools, development, product development, software.
For the new lines of product? Or?
Sir, we had one vertical. Today we have 5-6 verticals. Okay, there is an investment that goes into product design. There is an investment that goes into dice and tools. There is an investment that goes into technology. You need liquidity for that, right?
Okay. Understand. Okay. If I can, I got it. I understand that. So let me add one more question. Just to.
So there are a lot of other. We are having this call from last 1 hour. We have only completed 4 investors. please understand and please respect others also.
Okay, I'll come back in the queue. No worries. Thanks for that.
Thank you. Our next question is from the line of Devdeep Sarkar, individual investor. Please go ahead.
Hello. Hello, am I audible?
Yes, sir, go ahead. Yes, sir.
Yes, good afternoon. I would like some idea about the rail segment business, the business about
Yes,
it.
please.
The things I would like an input on is the total approximate order value that is given to the lighting sector by this industry, how we are trying to capture that, any new product updates so far, and
we are talking about railways, right?
Yes, the rail segment, correct. And also, I would like one more thing. What do we expect when we become a approved vendor? Like you said, we can apply for 20% of the products, and now we can go ahead for 80%. So how closely is that linked to the total order value given out by this industry?
Okay. Till absolute value from railway to lighting industry was the first question, right?
Correct. Yeah.
Honestly, the figures are somewhere around 500 to 700 crores. I don't know the exact figures, and it's very difficult for me to get the exact figures. So you need to bear with me for that.
Yes, definitely.
When you're in development, so there are a lot of companies who are trying to partner with railways, and there's a difference when you are a developed vendor and when you are an approved vendor. So in developed vendor, there is also a norm where you have to do a particular quantity to become an approved vendor. So there are chances that a lot of developed vendors, they don't want to make margin also, rather they make losses also, but to get that quantity, minimum quantity, so that after a year they become an approved vendor. Now, just to come to the margin part, in terms of margin, the gross margin of an approved vendor is much higher than a developed vendor. Because in approved vendor list, there are not many approved vendor lists for all the 16 products which we are bidding for. So there are 16 products requirement for the in-house coach of railways, and that is what we have developed, and we are getting approved for all the 16 products.
Okay.
Now coming to the future development, that was the first question which I answered. I am again repeating it. We have taken an initiative for Vande Bharat, and it is not an initiative from railway. We have taken it as focus. They are facing some problems. So there are a lot of lights which are not working in Vande Bharat, and they've been telling that how you can improve the quality. They are not telling that how you can improve the design also. So what we are doing is we are working with our existing product designer based in Germany. We are designing 3 options for them and showing them that what can be done in terms of energy efficiency, in terms of, we did certain surveys, like typically if you switch on the reading lights, okay, the person sitting beside you also gets disturbed, which is not in the case, okay, if you go in those IC trains or if you go in any of the airlines. And this is what we are trying to propose, that the reading light has to be very concentrated, it has to be very low glare, and this is what we are developing for them. We are also developing one product which is used very widely by them, which is used for general lighting. Now there is a lot of glare and there is a lot of light pollution. And we are giving them a technology which we will be showcasing it next month to them. So these are all initiatives by us. And third, but not the last, we are working on IoT, wherein we are proposing that in the night time the lights will be at 20%, so other passengers don't get disturbed. It saves them power also. If there are no people in the common areas, in the passage areas, the light will switch off automatically. In the night time, the light will change the colors to warmer so that it gives people soundscape. It is something called human-centric lighting. I'm not going to the technicality of it. So we are bringing all these things for railways. this is the whole idea of this will show them that how they can be at par with any international country till railway is concerned. And today railway is ready to spend, but they don't have exposure. And we think it's a big opportunity, huge opportunity for us. If instead of just doing the 16 standard products where we have competition, here we get absolute monopoly with railways if we get approved. So that's a calculative risk based on our assumptions, thought processes, and past experience we are taking. Hello.
Thank you. Our next question is from the line of Divyam Gupta, individual investor. Please go ahead.
Yeah, hi sir. Good afternoon, and thank you for the opportunity. I really appreciate it. So, sir, I was looking at your annual report for the last year, and it mentions that the research and development charges were just 2.61 lakhs for the whole year. And now you've been mentioning on this call that our research and development charges are approximately 10%, and it will move on to 10 to 20% range. So, sir, your words don't really match the numbers which are mentioned in the annual report.
So I was very clear, and there are two things. What you consider as R&D, product development. Tarun, under what area all this thing comes, whether it's a product investment, Dyson tools, and all those things. And what is the percentage? What is the percentage of that, if you can please answer?
So it comes under tools and others, in other said things, where we capitalize it under tools and others. So the expense, what you are seeing is, you are referring to profit and loss account, or which?
No, sir, I'm actually mentioning in page number 20 of the annual report. So it's mentioned the research and development charges were approximately 2.61 lakhs for the whole year.
Unfortunately,
Okay,
I don't have that in my hand, so I will just.
It's okay. It's okay. Let me answer it. Okay, so this is your accounting pattern. Okay, for us, when I say that we are going to do, I've been very clear that our investment goes into development. Development for us is design, technology, tools, and then production. So production does not come under development. This three. And this is an investment what we are doing. So what you are looking is only one area. So whatever tools we manufacture, whatever the design cost we incur, design cost, Tarun, where do you put it?
It is under P&L only.
But which area? So if you can answer him and if you can give him the percentage, what we can do is you can get in touch with our CFO. He will give you the actual percentage and actual which area it is coming in the in profit and loss or wherever it is coming, okay, so that it can be clarified.
Sure, sir, I'll do that. Thank you very much. That's all.
Thank you. Our next question is from the line of Ashit Koti, individual investor. Please go ahead.
Yeah, good afternoon, sir. Sorry, my question might be of repetitive nature. I joined a bit late and wanted to understand when you are talking about gross margin for an approved vendor would be higher. So how much the difference is between an approved margin for an approved vendor and a normal circumstances? That is one. And second is we had shown fourth quarter as sales were down. Now, normally when you are dealing with most of the PSUs or government sectors, fourth quarters are always better off. So if we could get get color on our sales segment wise, railways or governments, and then private sector. Within private sector, if our major focus is on resale or whether on malls and showrooms, then that kind of categorization, if it is possible to share.
So everything is possible to share, and that's the reason the CFO is on this call, and whatever data you need, he will share it with you. That's not a problem. Yes, you certainly joined late, and this has been a repetitive question on the quarter to quarter. And I've been talking from last 1.5 hours, and this is fourth time I have to repeat this.
No, then don't repeat. I'll go through the transcription.
That would be, I'll be very happy if you can go through it. So I'll answer the first question because that question has not come up till now. What is the margin difference between approved vendor and a development vendor?
Yeah.
So I just explained a few minutes back. Lot of developed vendors, they need to complete the quantity to become an approved vendor. So they are really ready to go down the margins. So a development vendor is working at an average margin of not more than 20 to 25% gross.
Okay.
Approved vendor is not working anything less than 50 to 60% gross.
Okay.
And if a approved vendor, or if the vendor who has been working with railways, and if he is developing some new product, where, for example, for Vande Bharat, then their gross margins can be more than 70 to 80% also.
Okay.
Yeah. Now, where do we get these figures? Because everything goes on e-tender. It is not on GEM, it is on IREPS, I guess. And we get the pricing once the tender is open for all the vendors. And that's where we have realized that the large quantities which are going, which is 80% to approved vendors, they are bidding at much higher price and they are still getting it. Because there are very few approved vendors. Yeah.
And with regards to the sales breakup?
This is also sales breakup. Also, I will request, so vertical wise, we have already discussed this. But today also retail is dominant. Second is home lighting. Second and third is home lighting and infrastructure lighting.
Yeah.
Then it is railways and IoT.
Okay.
Yeah,
now,
in terms of percentage, Tarun, if you can give the exact percentage, because I could not give even in this call.
So 43%, 58% is of projects. Residence is around 15%, and rest infra is around 7.5% to 8%.
7.5 to 8 is infra. Retail is
58%.
Retail. Home lighting, that is retail.
Home lighting, sorry. Home lighting is around 15%.
15%. So, where does the commercial lighting, I mean, say, the major area or malls and...
That comes in the retail for us.
That comes in your retail for us. Okay. And sir, when you are working on a project level basis, kind of with railways and for Vande Bharat per se, the lightings, are you also providing solutions for the stations, lighting solutions?
Currently, no. Not we are getting into it. It's more of a commodity, so we are not very keen.
No, here I'm not a technical person, but if you are, when you are talking about saving energy, I mean, say based on overall people flow and with sensors and things like that, you could decide and you can, switching it on and off certain areas where mass movements are there, more lights, where less movements are there, comparatively lesser lights. Fixtures might be there, but you would control the power, where to have more that kind of a solution, whereby station operating expense on lighting goes down. Today we do not have an air-conditioned stations per se, but tomorrow if we have that kind of, then the overall energy expense would be substantially higher for the railway stations, and in that scenario we will have an issue.
I understood your question. I'll answer it. So we had done a survey. We were thinking, and this is a very good idea, in fact, from your side, if we can implement IoT for railway stations. Now, you need to understand one thing. Railway stations are open in daytime, and from all sides. If you see most of the railway station all over the country. In the night time also the customer flow is so high. See, the sensors works on two areas. One is occupancy. So what is the density of people inside the station?
That's right.
And second is heat mapping. So if there are too many humans, there will be a lot of heat, and the lights will be blown to its optimum output. Now, if the occupancy goes down, then the lights will go down and you will save on energy. Unfortunately, in most of the areas, the occupancy is always been very, very high, and the energy saving part has not been very great. What we had cross-checked, except for if you go to small villages, 3-tier.
But what about underground metros? I mean, say underground trains, as we are moving towards that in many areas.
See, underground trains and all, we have still not bidded for that. Maybe this is for future, but and underground metros are still coming up. It has not come up in a big way. And today we are working with only 3 railway bodies: ICF, RCF, and MCF. Okay. And coach manufacturers who manufactures for 3 bodies. Our major focus is railway is huge, as you rightly projected, and it is not possible that you can enter all the areas together. Okay. So this is something, this took us almost 3 years, from getting ourselves factory approved, then getting our product approved, then getting the lab approved. It's a long process. So first we want to, and there is a big chunk here. So we want to first get this market, and then we will go to the another market.
Okay. Last question. I won't take too much. No, I won't take too much time of yours. Where do focus stands as far as international product and competitions is concerned, and whether focuses intend to get into exports in a bigger way, or can they compete with Chinese?
I'll answer your last question first. Chinese, no, we cannot compete, and we don't intend to compete. Till our product line is concerned, today the technology what we have, very few European companies also, rather not many European companies have this technology, you can say. Till international market is concerned, we already have presence in Middle East and Southeast Asia. We have not explored 100%. The potential is huge in Middle East and Southeast Asia. We will first explore that. It's not that we have not tried for European market. We have tried for Europe, but we have a language barrier, and the cost of getting into it is very high. So we are little bit, we want to take baby steps before entering to Europe. We want to be first successful in Southeast Asia and Middle East. Once we are successful, we have sustainable same amount of turnover or higher turnovers in those markets than India, then we will go to European market. We are already working with one of the largest firms in Europe for retail industry. We are developing some technologies for them, and they are the largest suppliers to or contractors to supermarkets and hypermarkets in Europe.
Okay.
The company is from Italy called Schweizer, and we are the only partner from Asia. They have not even approved products from China or any other countries. Yeah, but baby steps till Europe is concerned. And there are certain bottlenecks. We have a huge opportunity since this topic has come out. We have a huge opportunity that we are working with Mercedes-Benz, and we are an approved vendor with Mercedes-Benz. So today Mercedes-Benz has given us Middle East, Egypt, and Africa to work on, and they are also talking with us on European market. Same is with Uniqlo, but their term is that we have to give made in Europe product. So we are already in talk with certain OEMs who will manufacture for us under our brand name. so that it is a made in Germany product, and that process is on, and yeah, we should get that business. But in full-fledged, like in terms of having offices and all, no, currently we are not looking at it.
Right. The word which you use, sustainable, I mean, that was from the business angle, but
it is not from
which
the
is a new
business
trend.
angle.
Yeah, but the new trend which is coming up is on sustainability. So
yeah.
Are we also looking at that?
Yeah, so we are taking a lot of initiatives, and this is a serious initiative. So I told you I have been informing on this platform that I was in Europe for 1 month, and I have been discussing it with a lot of private companies, retailers. We've been interacting, and their biggest concern is sustainability. I had been into one of the buildings where they have also realized that they will not buy any material outside 60 kilometers radius, because it's not the freight cost, but CO2 emission.
Yes.
Yeah. So Europe is taking this thing very seriously, and we are trying to build it up in future when we enter European market, or even for Southeast Asia. This is taken very seriously. So we are working very hard on sustainability. It is a strategic planning. Like we had taken a conscious call that we will zero down on plastic in our product. So normally every product it comes with a plastic bag. So it has been converted into paper bag. The cost is little higher, we can afford it. We are converting our product into recycled plastics wherever possible we can, with whatever technological barrier we have. But it's a huge step. And these are the steps which are really helping us. Like we are trying to use a lot of recycled plastic. Like we are doing some offices where we are using recycled cork inside the light fixtures as a decorative element. We are not using any aluminium. So those are the initiatives we are taking, and these are highly appreciated. And in long term, any international company coming into India, they come with these norms. And there are very few companies today who are able to supply this type of products, sustainable products.
Right.
So if we will not see immediate effect in 6 months to 1 year's time, but over a long term, this will play a very important role.
Okay. And any of our projects or products getting any benefit on carbon credit?
No. We don't.
We are not getting eligible for that.
No, we are not a heavy polluter. We are what we do is
not as a polluter, but when you are offering a solution which reduces emissions or which reduces the consumption of power, then can we opt or can we get the?
Honestly, I have not looked into it, but this is something we will after this point you have raised, we will look into this matter.
Okay.
But till date, no.
Fine. I have a couple of others, but I will come in queue if possible, or maybe 1-to-1.
Whatever you are comfortable with.
Yeah, right, sir.
Thank you. Ladies and gentlemen, due to time constraint, that was the last question of our question and answer session. I now hand the conference over to Mr. Vasupal Shah from Kiran Advisors for closing comments.
Thank you from the management and all the participants who have joined the call of Focus Lighting and Fixtures Limited. If you have any queries, you can write us at research@kirinadvisors.com. And once again, many thanks to management and every participant of the call. Thank you.
Thank you so much.
Thank you. On behalf of Kiran Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you so much.
Thank you.